Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, we are going to dig deep. We're actually only going to take 1 to 2 charts this week, and we're going to really drill down. I'm going to teach you guys how to read candlestick charts properly. There's a lot of you guys making serious errors about what a stock is actually doing versus what you think it is doing, okay? So today we're going to dispel some of those myths. We're also going to talk about double bottom retests, bottoming tails, trend line breaks, topping tails, buy setups, breakouts, all on 1 to 2 charts. We're literally going to break down these charts and get really granular so that you guys can learn how to properly read a chart, because if you're not reading the chart properly, you're going to be on the wrong side of the chart, the wrong side of the market, and that's going to cost you a lot of money. So I've been talking to a lot of traders lately who are like, you know what? I think I have my management down. I'm really good, Jared, at following my plan. But then they send me some of the trades they're taking. I'm like, that's not a buy setup. Oh, that's not a breakdown. That's not a climactic. You're reading the chart completely wrong. All right. So today's lecture, we're going to dig really deep into how to read a chart properly. You don't want to miss this one. Okay. I am Jared Wesley of Live Traders. If you like these videos, please click the like button, smash the subscribe button. Let's get to it. Today's lecture topic is how to read a chart properly. So what we're going to do is we're going to take 1 to 2 charts and we're going to dig deep, granular deep. Like there's maybe 10 slides in here and pretty much the same chart is in 7 of those 10 slides, because we're going to dig deep into this, because I'm getting some emails from folks which is opposite of what I'm normally getting, right? Most of the time it's, hey Jared, I'm really struggling to manage my trades. I'm selling too soon, or I'm not holding to target, whatever, right? But recently I'm getting a lot of these, Jared, the market's so tough these days. And, you know, I just got 2 emails this past week from people where they said, I'm actually managing perfectly, meaning I am not breaking my plan, but my batting average is 31% or 27%. Well, clearly in that case, you are not reading the chart properly. So today we're going to dig in a little bit on how to read a chart properly, objectively. And that's the key, objectively. Obviously, we see it every day in the chat room. There's a lot of differing opinions about stocks. That's what makes the market go up and down and sideways and all around. But we here at Live Traders, we do it a specific way because it works well for us. But before we dig into any of that, we must first talk about when will the insanity stop. I'm sighing today a little. This one is, we've done a lot of these, right? Hundreds, literally hundreds of these. This one is a tough one, right? Some of them we sit there and go, what an idiot, right? And other ones are like, wow, that's crazy. This one is sad. That's all I can use. Is the word I'm going to use today. It's just sad, all right? So let's dig in. You can read the top. This email was sent to me, I don't know, maybe 5 or 6 days ago. Okay, it wasn't that long ago. Insanity, $27,000 lawsuit. Okay? So without reading this, it's not very long, but somebody borrowed $25,000 from their wife's grandmother. Borrowed $25,000 from their wife's grandmother, okay? And this person was excited, got the money into his account. By Friday morning, all right, so this is 5 days later, Monday, money in account. Friday morning, it was gone, plus the $2K he was supposed to, quote, learn with. 5 days gone. Someone else's money, your wife's grandmother. Fast forward a few months, the loan came from his wife's grandmother. Now the grandmother has filed a lawsuit. His wife has left him and moved across the country, also has custody of their kids, filed for divorce, and is now living with a friend of theirs. His life is ruined permanently. Now, I am sure there's probably a little more to the story than just that, but I have a feeling the $25,000 was a pretty big part of it. Again, there might be more to the story, but how do you borrow 25 grand from someone and then blow every penny of it? 2 reasons. Get rich quick, no money management. That's it. Get rich quick, no money management. This is not an easy thing to read. Somebody's not seeing their children over this. Someone's getting a divorce over this. And on top of those things, they're going to have a lien put against them because they're probably going to lose in court, depending if they what type of an agreement they had. He's going to have to pay back this $25,000 on top of it. I usually give people a hard time and I laugh at a lot of these. This is just sad. Now, the point of going through this is a serious business. We just got done talking about how wonderful the business is because you can trade from anywhere in the world that you want to trade. But you don't want to do this either, right? This is a very, very serious thing. And I'm not going to harp on this person. This was just a foolish mistake. And this mistake isn't just a financial mistake. It's costing you your family, your kids, and you're still going to have to pay the money back too. So I would just say to you guys, please, take this stuff seriously. Take your money management seriously. To succeed, you first have to last. If it's your own money, that's your choice. But when you're borrowing somebody else's money, man, that's tough. We've all made mistakes in life, but this is pretty egregious. 5 days, $25,000. All right? Serious stuff. Manage your money. All right. So let's dig into today's topic. We're going to talk a little bit, okay, not in huge detail, but a little bit about transitionary retest and failures, okay, because I don't talk about this topic very often. So you can see here on the left-hand side, we're in a downtrend, lower low, lower high, lower low, lower high, lower low, and we still actually have a lower high here. But what we get over here, once we break this yellow, orange line, whatever it is, this is what we call a trend line break, right? So this is a trend line, which again, we don't talk a ton about here at Live Traders, even though they are useful. You're breaking above the trend line. Okay, that's the first warning sign, the first indication. Notice it says not an action event. This is your first warning sign that perhaps the downtrend is ending. We don't know this yet, okay? But this is your first sign that maybe the downtrend's ending, maybe momentum is slowing down. You'll also notice in here there is a moving average, okay? You'll note that it's not just breaking the trend line, it's also breaking above the moving average. So that's check one, check two. Breaks the trend line, warning sign, not an action event. Breaks the moving average, warning sign, not an action event. Retests and fails to put in a new low right here. So it retests the prior pivot, but it does not go below the green line. Warning sign, possible action event. We'll talk about that a little later. Possible action event. But we're still in the warning sign stages here. Then what happens? Possible volume spike, which is not on the chart, extra confirmation. Possible extended move, many bars down, extra confirmation. Right? What I'm saying is the context matters. Okay, taking something in a bubble or out of context doesn't do us any good. So I want to know, what does the bigger picture look like here? Is this stock down like 27 days in a row? Is this stock gone from $100 down to $20 and then it breaks the trend line and then it has a big volume spike and then it has a higher low, right? So all of those things put together are going to help us read the chart better, but it's still an aggressive area to buy this chart. You generally want to wait till it's put in at least one higher high, okay, and one higher low. Technically speaking, we are still not in an uptrend yet, right? We've only put in one higher high and over here two higher lows. Well, the definition of an uptrend is multiple, which means two or more higher highs and higher lows. Two or more higher highs and higher lows. We don't have that, but one of the safest areas on this chart is right here. See the rising moving average? See the green pullback here? Why? Because now you have a higher low, all right? Now you've broken the trend line. Now you've also put in a higher high. And remember, for those of you who have taken professional trading strategies, what was the ceiling becomes the floor. So this red line was the ceiling on the way back up, but now over here, it's broken through it and it becomes the floor on the way back down. So this is one of the safest areas you can buy on a chart because of all of the signs you've gotten, all of the confirmation you've gotten, and now you're in between what we call a stage one and a stage two, which is a transitionary period between stage 1 and stage 2. So we're basically going to talk about this today, but we're not going to talk about it in terms of charts that I make. We're actually going to look at a real chart and go over this, okay? So the first chart we're going to look at is this, but this is not the one we're going to spend the most time on, okay? So note, stock is moving up, moving up, moving up, and then it goes lower, 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 lower from $28 down to 10. But notice on the way down, you have a big bottoming tail and a big volume spike, and then it breaks above the trend line, right? Note, it doesn't put in a higher high, but it does break the trend line. So that's warning sign number 1. Oh, okay. This stock has moved quite a bit lower from 28 to 10. Big volume spike, bottoming tail breaks the trend line. All of these are warning signs. Not one of those things, none of those things are action events. They are warning sign events. Okay? Then we pull back and we get a retest. Okay? Note, the retest also has a volume spike on the green bar, and it is a higher low. So the question here simply is, how aggressive do we want to be? All right? Because as it said on the last slide, you can buy here, but it's much more aggressive. Okay, in this case, it bounces off the low on volume with a higher low as well and gives you a little bit of a 3-bar play. Now, this is not a traditional 3-bar play. We do not generally take 3-bar plays inside or out of a buy setup. Okay, so in this case, you could choose to take this, or what you could do is wait for it to put in a higher high over here and look for a lower time frame entry. Because this is a daily chart, you could look for a lower time frame entry. But the point on this chart is to get you to understand how stocks go from a downtrend to a sideways trend to an uptrend. All right, it doesn't just happen in one click, right? To get confirmation is usually to have that higher low double bottom retest, usually a higher high, volume spikes, etc., and so forth. So again, to repeat myself for the 17th time, you want multiple concepts converging in an area to get the highest level of confirmation, which is also the highest accuracy in your trading. So let's take it to one more chart. And this is the chart now that we're going to spend the time on. Okay, we're going to look at this like 6 ways from Sunday. Okay, so we have a stock here that is moving lower on the left-hand side of the chart. Okay, red bar, red bar, red bar, bounces up, pulls back, bounces, slight pullback, bounces, pulls back, bounces, pulls back, bounces, pulls back. But note what we're seeing here. We are seeing a micro time frame. In this case, I believe it's a 5-minute chart, a micro time frame transition. A stock that was going from a stage 4 downtrend into a basic double bottom retest with a higher high, higher low, higher high, higher low that ultimately moves back into a stage 2 uptrend, but on a micro time frame, okay, on a 5-minute chart. So now we're going to talk about good trades versus bad trades, all right, because not every one of these buy setups is created equal. And this is the point I want to make in general today, is just because a stock has 2 higher highs and 2 higher lows doesn't make it an uptrend or a downtrend. Just because a stock has 2 lower lows and 2 lower highs doesn't automatically make it an uptrend or a downtrend. All right. And my point simply is, be very specific with your entry criteria. You guys should have pre-trade checklists where you are very detailed and very specific about what you have to see before you take a trade. And I see it frequently. For example, imagine a stock shoots up and it goes from $7 to $10 on a 5-minute chart. Think about what I just said, from 7 to 10. The stock pulls back 2 bars from 10 to 9, and you're like, all right, I want to take the buy setup. You're like, whoa, wait a second. That stock just moved 40%, right, from $7 to $10, and it's doing a $1 pullback, and you want to take a shallow retracement buy setup? You don't think maybe that stock's tired? So this is what I want to talk to you guys about today, is the quality of the patterns you're taking is very important. Okay, the quality of the patterns you're taking is very important. So take a look. Let's rate these trades. Okay, so we have 1, 2, 3, 4, 5 pink arrows here. Good trades versus bad trades. So let's start with number 1. Okay, let's start with this one to the left, all the way on the bottom here. What do you guys think about this one on the bottom, all right? This flat pink arrow. Good, bad, crappy, love it, hate it. So most of you guys are saying too aggressive, crappy, aggressive, too dangerous. All right. And guess what? You would be right? This is a pretty dangerous buy setup. The stock hasn't even put in a higher low yet. So we're still clearly in a downtrend. And the other, and this is what I want you guys to do though. At first you're like, oh yeah, crappy, but we want to know why. It's like when you do a math question in school. You can get the answer, but the teacher wants to know is, how did you arrive at the answer, right? What was your process? So what's our process here? Well, we have a declining moving average, don't we? Okay, that's not a bullish sign, all right? We have a stock that's clearly put in multiple lower highs, pivot high here, lower pivot higher, that's 2, okay? We put in a lower low here. So really, there's nothing here to suggest we should buy this because we're in a downtrend. We're below the moving average. We've put in 2 lower highs. We put in a lower low. There's no volume spike down here, even on the bottom. There's truly nothing here to say, yeah. The only thing you can scratch at here, the only thing is, it's what I would call a weak new low, right? It's not a significant new low. It's a weak new low. Right? In this case, you would call it a strong new low, right? Because it's a stock that's moving lower. So it's not what we would call a significant new low, right? A peekabooed lower. That's the only thing you can grasp at. Everything else is against you here. You wouldn't buy this, but yet, guaranteed 100% chance. Sometime in the next week, someone in the chat room will look at a stock just like this and say, Jared, it's a double bottom retest. Let's buy it. Are there scenarios in which we might justify buying this? There are, but they're few and far between. Maybe it's a climactic move or a stock that gapped down 40%. Like Sava today, we were very aggressive, right? We were very aggressive. So there might be a scenario in which we could buy this, but they are very few and far between. And 95% of the time, you're not ever going to take this long. So now let's move to this one, all right? If we go here, and in fact, let me go over here. All right, there we go. Okay, we'll go over here. My apologies. All right, this is the same chart we just talked about. So your entry is 27.47, your stop's 27.36. I mean, this is tough, right? This is really, really, really tough. If you were to buy it, it would look like this: target over here. But we're not going to buy it because it's just not a good buy setup. It's far too aggressive. Again, you might be able to find an exception, but most of the time you're going to stay away. It's far too dangerous. And the other thing too is, I don't want to hear your hindsight bias, how later on you're like, but it moved up $2. We don't care, right? In real time, not a good buy setup, okay? Now, let's move to the second one, okay? This is a stock that has now put in a little bit of a higher high, has put in a higher low, okay? One of the things to consider here, right? One of the things to consider here is if we look to the left, what do we have here? Right here where I'm circling this, right there. What is this? Talk to me. Right there. What is it? I'm circling it. Indecision, consolidation, struggling, support, uncertainty. Come on. Only one person has gotten half the answer right. Come on, guys. It's a failed sell setup. It's a failed sell setup. Yes? If you were to take the strictest definition from the textbook, does this not have 2 or more higher lows? Yes. Does it not have 2 or more higher highs? Yes. Does it not have a topping tail? Yes, it does. Is it in a downtrend? Technically, yes, it is. It's a failed sell setup. See, you guys are looking at this side of the chart. Stop. Cover it. Cover this side of the chart and just look at these bars right here, right where this green line is. It absolutely is. By textbook definition, it is. We can have a debate whether it's a good one or a bad one, but we're not going to debate whether it is one, because it is one. Good? Not really. The retracement level is pretty deep, but it is technically a sell setup. Okay? Now, the reason you guys ignored it is because you're already looking over here to the right. You're already focused over here. You've just ignored it. Now, imagine if you put a piece of paper over this, right? Imagine, let's just do this for a second, all right? Just for fun. Let's do this, okay? It's different, isn't it? Right? Now it looks a little different. Now you're looking at it going, that doesn't look like such a terrible sell setup. In fact, what if we, whoa, hello. What if we move it to right there? Okay? This is why it's really important to cover the future when you're looking at charts and you're reviewing charts. Because in real time, you don't know what the future brings, right? It's true, you don't. And this is why I can't stand hindsight bias. So yeah, it has a topping tail, it has higher lows, it has higher highs, it is in a downtrend, it's actually on the moving average, right? I wish ink were cheaper, right? Anyway, some of you might be tempted to take that. It's tough, right? So, let's move along from that and talk about the buy setup. So now, what we have is a failed sell setup. Now, why is this important? Okay? I'm on PowerPoint, Braden. I'm sure you have access to Microsoft Office. Go to Best Buy, it's $149. All right, so why is this important? Why? Why is this important? Anyway, just tell me, why do I want to talk about this failed sell setup? What is a failed sell setup really? What is a failed sell setup really? This is out of professional trading strategies. Good, you're on the right. That's it. It's buyers stepping in. It's confirmation of buyers. It's a bullish signal. Buyers coming in. It's a strength confirmation. That's what I'm looking for. It's a confirmation of strength. So it makes my decision to take the next buy setup a heck of a lot easier. Because now I see a stock that was in a downtrend, even though it's not a significant new low, it was still in a downtrend. And all of a sudden I see a failed sell setup. Buyers are starting to take control. And note, it's in an area where the moving average starts to change direction. And it now becomes the first higher low. Once it breaks above this topping tail right there, this green line, this pivot, becomes the first higher low. So now we are potentially, we don't know yet, potentially starting to transition. Okay? So not a significant low here. A failed sell setup now becomes a higher low. Buyers are stepping up. We still have some struggles. This pivot, okay, what happens? This wide range green bar takes out that pivot. It's a new pivot high, which is another bullish sign. So now what do we want to see? After we have a higher low, we're above the moving average and we broke the prior pivot. What do we want to see? What's the next thing we want to see? Talk to me, guys. All right? Right now, again, I'll repeat. We have a failed sell setup, a new higher low, and we broke above the prior pivot high. What's the next thing you want to see? A pullback with what? A pullback is correct. A pullback with what? Come on. No, we do not want to retest. We do not want to retest. You want a pullback with what? Thank you, Tuna Tom. Thank you, Tuna Tom. If someone else said it, I apologize. Thank you, Tuna Tom. With a higher low. You do not want to retest this prior low. If it's really strong, why would you want it to retest the prior low? You want a higher low to prove the buyers are stepping up even sooner than they stepped up previously. Okay? This is very important here because we have to, I said we're going to get granular. We now have a failed sell setup with a higher low and a higher high. The next thing you want to see is a smooth sequential pullback with a higher low. And in this case, we get a higher low. And it's at the moving average, and it's roughly a 50% retracement. If you take the red line as the high, and you take the green line as the low, this is roughly a 50% retracement at the rising moving average. Hello. We're starting to do what? Put multiple concepts together to increase the accuracy of our trade. And it's all right in front of you. Don't put your opinion on the chart. Let the chart speak to you. okay? But you're going to miss it if you're always looking far to the right in hindsight. This doesn't happen in real time, so stop looking to the right. Seriously, just stop looking to the right. What you want to do, take a piece of paper, put it over the chart and go each bar by bar by bar, one at a time. And go, now, what? After you see the one bar, what would I like to see on the next bar? Okay, now I see that. What would I like to see on the next bar? Ooh, look, a green bar here. 2 lower highs, 2 lower lows, 50% retracement, rising moving average. Now we have what? Higher high number 1, higher high number 2, higher low number 1, higher low number 2. Whoo! Now we officially have an early stage 2 uptrend, which makes this entry at 27.58 by 27.51, quote, money. Money. Now, can we dissect this even further and criticize it? Sure we can. Would I have preferred a better or stronger higher high? Yes, I would have. This red line here, this wide range green bar, I would have preferred this to go a little bit higher. Why? Take out this pivot even more. Prove to me you're even that much stronger. But we can't be choosy sometimes. I mean, we can be choosy, but you understand what I'm saying. We got almost everything we wanted to see. So there's no reason not to take this buy setup. The only reason would be some news report coming out like FOMC, or maybe the market just starts to tank immediately. Otherwise, there's just no reason not to take this. Okay? There's just no reason. And then what happens? We take the buy setup, the first target area, not a great target area. It's only 10 cents, but it's only a 7-cent stop loss. It's 1.5 to 1 at the first target area. Okay, again, not great, but okay. Second target area is the prior pivot high, the last pivot remaining, which is 27.90, which happens to be 32 cents away, which is 4.5 R. That's better. So we move up, we move up. Now, what's the general rule? 1, 2, 3, 4, 5 bars up. You guys have seen it before. We've talked about it. 3 bars up, think about selling or think about a pullback. 4 bars up, really think about selling or really think about a pullback. 5 bars up, really think about selling or think about a pullback. Well, once you get up to here in the prior pivot, you should basically be out of this trade or be out half of the trade. Now, it depends on your management style. If you're a pivot-based trader, you're only probably going to sell a third or half of your shares and then wait for a pullback and then add and reduce, okay? So now we know that this buy setup right here is really nice. Now what? Now let's move on to the next one, okay? Now we have a second buy setup right here, okay? What do we know before this buy setup ever triggers? What do we know? Basic things. Tell me some basic things before this buy setup ever triggers. Just about the chart in general. What new information do we have now? Anything? Have we learned anything? Vlad has it. We know we're in an uptrend now, right? We're not transitioning anymore, right? We are now firmly in a new stage 2 uptrend. It's a micro uptrend because this is a 5-minute chart, but that's okay. It's still an uptrend, okay? That's really good. We also know for this buy setup to work, we're going to have to overcome a double top. That's not necessarily easy, right? So we're juggling at this point, right? So we know we're in an uptrend. Good. We know we're at or near the rising moving average. Good. We know that this bottoming tail is at prior price support, right? Minor price support. Good. We know the pullback is perhaps 40, 50%. Good. So we have all these checks. Good. This is where your pre-trade checklist becomes really important because we do have to make decisions on the fly. And sometimes those decisions are really obvious and sometimes they're not as obvious. Okay. So in this case, we know we're in an uptrend. We know we have a 40 or 50% retracement. We know we're at a rising moving average. We know we have a bottoming tail. We know we have a narrow body bar, but we have some congestion at the top. Some overlapping bars that if we drilled down might be a 2-minute or a 1-minute consolidation. Well, we don't like square tops. That's a concern. And there's a prior pivot high. So now we have 2 pivots. What do you do here? I mean, this is a genuine decision. What's the decision you got to make? Well, 1, 27.79 is the entry. 27.70 is the stop. 9-cent stop, 11-cent target. Okay. What do we do here? Trade management, Felix, becomes very important. So let's talk about it. if you're doing 1R targets, probably an okay trade to take. Probably, right? If you're doing 2R targets, but you move to break even at 1R, probably an okay trade to take. Probably worth the risk. But what if you're doing 2 or 3R all or nothing? Now it's not as clear as it was. I'm not saying you can't take it. I'm saying it's definitely a concern at this point. It's become more risky because you don't have protection. And let's be fair, we are in an uptrend, but we're also at a double top. And this is where putting in a higher high would have made me feel much, much, much better. So if this stock had moved significantly above the red line, like say to $28, okay, right? Say it had moved, we wouldn't be having this discussion, but it didn't. So there's clearly still a few sellers left in the building because the stock pulled back. Now, in fairness, it was up 5 bars when it pulled back, but it still created a double top. For me, I would take it because I don't do 2R all or nothing, and I raise my stop relatively quickly. But if you're doing all or nothing, there's a decision there. Okay, there's a decision there. All right, now let's move to this. All right. So now we've moved up another 1, 2, 3, 4, 5, 6 bars in a row. Very strong move, by the way. We pull back, and we have another buy setup. Now, by definition, we have another buy setup. 2 lower highs, multiple 2 or more lower lows in an uptrend. That's it. That's all the book says. 2 lower highs and 2 lower lows in an uptrend. Relatively sequential pullback. Well, we could argue about the sequential pull, but what about this now? What about this buy setup? Good, bad, ugly? What do you guys think? Give you a second to think about it. What do you think about this buy setup? Depends on the ATR of the stock, okay? Overextended, not good. Well, let's break it down. Okay. We're up 1, 2, 3, 4, 5, 6 bars. So we know where there's strength here. That's good. It got a little far from the moving average. It pulled back towards the moving average. But this pullback is pretty sloppy. It's a very choppy, overlappy pullback, right? The overlap on every one of these bars is fairly significant. It's not really a sequential pullback. They actually have relatively equal bottoms here. It's at the moving average. Okay, that's a plus. Check that off on your checklist. The stock is up quite a bit. That could be a negative area of your checklist. We take a look at the risk to reward. It's a 7-cent stop loss, and the first target is the 28.16 area. So you have 11 cents, so that's 1.5. But this is an area or a situation in which you'd probably want to drill down to a lower time frame, the 1 minute or 2 minute. Why? Because I have a sneaking suspicion it's really ugly on the 1 or the 2 minute chart. I know this because of the topping tail here, the little doji bottoming tail here, this narrow body doji bar right here. This is indecision. What's happening here? Buyers and sellers are fighting it out. And the pullback retracement level is pretty shallow. Like you wanted to really see it pull back to this green bar. And people ask this all the time. Well, why? Why would you want to see it pull back to the green bar, Jared? If buyers are stepping up sooner, that's bullish. No, it's not. Not always. Because sometimes they step up earlier, but they haven't rested well enough or long enough yet. So that's why, and we talk about this in PTS, the 50% retracement is the ideal retracement. Because the 25% retracement means it hasn't gotten enough rest, and usually a bounce from a 25% retracement does not put in a significant new high. It usually fails sooner because it hasn't rested long enough. Okay? Davey Dave asks, which time frame moving average are we looking at? One, Davey Dave, it doesn't matter. Okay? That's the first answer because truly, it doesn't matter. This could be a yearly chart. It could be a 1 minute chart. It could be a monthly. It could be a 60-minute. It doesn't matter. But we're looking at a 5-minute chart. Okay? This is a 20-period moving average. But it doesn't matter what time frame we're looking at. It doesn't. Okay? But this is really not a very good buy setup. It's just not. There's too many negatives. Can we find some positives? Absolutely. Of course. But this is one where if you're going through your checklist, you're probably going to find a lot of empty boxes. Check, 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 maybe 2 or 3, and then about 4 or 5 empty boxes. That's not good enough. It doesn't matter if it could work. Anything could work. A stock that's up 27 days in a row could go up to 28th day. But we're not looking for that. We're looking for odds-based results, right? I can't know the future, but I can use current odds to help me predict the future. And in this case, I am not getting super excited. This skirt is not getting blown up here, right? We're not walking past the Victoria's Secret window here, all right? Bad analogy these days. But anyway, let's take a look at the last one. All right, what about this? First question, yes or no, Y or N. Is this, by the textbook definition, setting up to be a buy setup? Yes or no? By the textbook definition. No, nope, no, 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 definitely no. Yes to extending volume. Yes, it is. No, yes. You guys aren't paying attention, are you? The vast majority of you are not paying attention. We just talked about this on the last buy setup. All you need are 2 lower highs and 2 lower lows in an uptrend. So does this have 2 lower highs? Well, there's 1, there's 2, there's 3, there's 4. There's 1, there's 2, there's 3. Are we in an uptrend? Yes or no? Yes. Is it a new high though, Victor? Yes, we are in an uptrend. There is nothing here that says we are not in an uptrend. We're not talking about whether we might soon be transitioning. We're talking about right this very second. We are in an uptrend. And this stock has 2 lower highs and 2 lower lows. By the book, it's a buy setup. And that was the exact question I asked. By the book. Per the book. Yes, it is. So the next question is the important question. Is it a good one? And no, it's not. It's crap. It's total crap. Okay? Why is it crap? Well, let's take a look. Okay? It's crap because this is a weak new high, right? This is the previous high at like 28.16. What's this high? 28.21. It put in a 5-cent new high. What does this weak new high tell us? Talk to me. 3-letter answer. Sorry, 3-word answer. 3-word answer. It's a weak new high. What does it tell us? Sellers coming in. Okay, that's another way to say it. It's another way to say it. It's tired. That's another way to say it. The 3-word answer I'm looking for is momentum is slowing. Right? This stock had a lot of bullish momentum on the way up. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Yes, but it's a weak new high. Notice, guys, take a look at this over here. This right here, from this high to this high, significant, right? From this high to this high, significant. From this high to this high, significant. From this high to this high, very insignificant. It's a weak new high. Momentum is slowing. Sellers are creeping in. But what's also important, look at every green bar on the way up. What do you see on all these green bars, guys? Forget that it's green for a second. What do you see on this bar, this bar, this bar, and this bar? Forget that they're green. What do you see? Exactly right. Choppy, battle, indecision, topping tails. There's a fight going on here, right? There's a back and forth battle going on right here. And the fact that it put in a weak new high tells you the battle is starting to be won by sellers, right? These are choppy, overlappy, sloppy bars. It peekaboos over by 5 cents and then pulls back. Sellers are beginning to make progress. They're starting to win the fight. And then you get a pullback, and the pullback is now significantly below the moving average. Momentum is slowing down here. Stock is tired. Now, not only do we have the momentum slowing, if we take this buy setup on the way back up, the risk to reward stinks. Okay, well, I don't know if it stinks. It's still okay. But it's overlappy. So you have more of a rounding top now, right? We don't have that V top anymore. It's a rounding top with lots of overlap. So this is one you would absolutely stay away from, okay? So if we break this all down, we start down here, right, with this pseudo double bottom, and we said it's too aggressive to buy this here, okay? Then we have a failed sell setup right here, which confirms the buy setup over here, and we determined that this buy setup was very good. The second one was pretty good. The third one was not so good, and the fourth one is just utter crap. Okay, so they get successively worse as we go up. But you need to please put a piece of paper over the future, because it's so easy to say you would have done something when you know what the result was. But in real time, it's different. And almost no one except for one person, Tuna Tom, got the sell setup, the failed sell setup here, which means you're looking too far into the future. Okay? So a couple more slides and then we're going to end this. This is what nice transitions look like. Okay? Breaking of the trend line, higher low, higher high, higher low, higher high, higher low. Oh my goodness. These two buy setups are so disgustingly good that it just, wow. That's a weekly chart. From 20, this thing goes to 50. Now, I'm not saying you would have held it to 50, but you would have held it to about 37. You would have added right there, and maybe you would have been out on this big red bar. But this is what a good transition looks like. I mean, that is so unbelievably, incredibly nice at $20, and again at like $24. All right? That's what a good transition looks like. Now, again, I don't know if you would have held through all this crap, but you already made a bunch of money here. You know, $17 move on a dollar stop is pretty good. Okay? Same here. Breaks the trend line, puts in a higher low, then breaks the trend line, puts in a higher high and a higher low above the moving average. Wow. Bottoming tail doji bar. It's beautiful. Okay? It's beautiful. All right, so that will do it for this week's lecture. I hope you guys learned a little bit about good buy setups versus bad buy setups, how to more accurately and properly read a chart and drill down more granularly so that you're not missing anything. And I am telling you, please, a pre-trade checklist is your friend. Okay, it really is your friend. Now, when you're reviewing older charts, hide the future information. Okay, but when you're in real-time trading, have a pre-trade checklist and make sure it's very specific. And if you don't get a certain number, maybe grade it. Or I need 70 out of 100. If you don't get a certain number, you don't take the trade. It will make your trading much easier. Okay, so I'm Jared Wesley of Live Traders. We'll get back at it again next week.